Confirm. Sunday, can you hear me? Somebody can you hear me? Ija, are you on the call?
Yes, I can. I can hear you.
All right, cool. Ija, are you on the call? I'm seeing companion mode. Which one is companion mode? Can you talk? Let's be sure.
Hey, what's up? Let
Okay,
me
confirm
check.
that you can talk.
How is my background? Oh, not too much.
It's coming and going.
What's coming and going? The noise.
Yeah. No, your voice, your voice.
My voice is coming and going.
It's much better now.
Okay.
Good evening, everyone. Can you hear me? Please let me know if you can hear me. You can type in the
Yes,
chat
yes, yes.
box. All right, great. So, welcome everyone to the Make Money series for March. And this would be the first of two sessions that we'll be having this week. So, that is today and tomorrow, actually. So, yeah, without any further ado, I guess we should get started. Please, if you can tell other people about this, they should join. It's not going to be very long, so you don't want to miss out on all the amazing stuff that will be said today regarding technical analysis, because we are actually going to be teaching you how to make money. Um, Technical analysis and day trading are an essential part of making money in crypto. So, if you pay attention properly tonight, I'm very sure that you'd walk away with wonderful insights on how to leverage technical analysis and day trading in making money. Yeah, so again, welcome. This is sponsored by Coins and Cash. Coins and Cash is committed to giving everybody access to crypto by enabling crypto banking, and we do that right now with investments. We have an investment product that is open to anyone. If you want to learn about more about that, I'll let you do that much later. And then you can always send me a DM on WhatsApp or just signify in the community. We are part of the community, and we'll take up the conversation from there. But yeah, to go on, I think let's have Udo. Um, Udo, what's up? Can you hear me? Okay, can you guys still hear me? Let me know if you cannot hear me. I'm in the chat box here. All right, great. So yeah, for today's session, for the entire session, that is the entire day technical analysis class for this month's Make Money series, we will be having two facilitators that are they are big men in the field. They have done it. They have experience, and they are the best people to talk to you about it. To tell you how to get started, to tell you why you should get started, and yeah, what exactly are you getting started in? So these fundamental questions, you get the answers to them today. So the first person that will be coming up to speak is Tunde. Babatunde Adeyemo. We work together at Coin and Cash. He's an amazing analyst when it comes to crypto, when it comes to markets, and he does a great job. And he's going to be talking to us basically about his trading story. He's going to be talking to us about um, different people he has interfaced with in trading, the progress they've made, and about the opportunity in trading. And he would wrap it all up with the fundamentals, how to get started, and get yourself actually put in the work, in the trading. So yeah, today let's have you. Just introduce yourself. Tell us about what you do. Then give us a little bit of story about how you got into trading and why you got into trading.
Hi guys, good evening. I hope everyone can hear me clearly.
Loud and clear.
Just all right, cool. So I am Tunde Adeyemo, technical analyst, a trader, full time, part time, everything. Yeah, so I trade full time all day, anytime, anywhere. That's why I love trading because it can be done anywhere. So far, you have your internet and your phone, which is why I would be using my phone today to take you guys on technical analysis. But most times, I've seen people tell me because they don't have a laptop, that's why they are not trading. You can use your phone. So far, you have an internet to work. And so a little bit about me. How did I start trading? Like started around 2016. 2016, I think I was at 100 level. Yes, I can't remember. 2016, I heard about Bitcoin then. I was like, let me just buy into it. I don't know what Bitcoin is. I just bought with about 40K. And in one night, just one night, I saw my 40K going to like 47K. And I could not sleep. I was like, this is blood money. In just one night, around 12 a.m., I was awake from 47 to 49 to 50 to 60 the next morning. Wow, this is so sweet. I thought crypto was like that. So I brought more money and kept rising. Then I withdrew. I did big boy, spent some money. Then after that one, I decided to put more. Then market got me and my money just kept going down, going down, going down. I was like, wow, this is how it really works, or something is going on. Then I went online, I checked about trading actually. Then I saw that trading is not something you just buy when everyone is shouting buy, buy, buy. And you just expect it to keep rising. It doesn't keep rising. There are sometimes it comes down, then there are sometimes it goes up too. The essence of this class is to know when to actually get into the market and when to get out. So because I lost just a little out of what I earned in the first place, I had to go learn about trading. I learned about technical analysis and fundamental analysis. So it was after I learned it, since then trading has been sweet. It's been awesome. So tonight we're going to be taking you guys on a bit of technical analysis. Trust me, technical analysis is not something you can finish a day or two. It's very, very wide. But then at the end of this class, you should be able to at least know when to get into the market, how coin or uh whatever coin it is. I hope you guys can hear me. Please type in the message. Let me see if you can hear me.
Yeah, I can hear you.
All right, so
I
tonight
can
we
hear
have
you.
two
Yeah.
segments. We have
Sorry,
two
Tunde.
segments
So
tonight.
yeah, can you hear me?
Yeah, we can hear you.
Yeah. So I was just about to say that before you go on, let me just bring up zombies to also give us a little story and to get us introduced to the whole topic here. So zombies, are you there? Can you hear me? Zombies, can
Yes,
you hear me? All right,
yes, we
splendid.
can.
So yeah, just introduce yourself. Tell us about how you got into trading. Then give us some. You can just give us your own introduction as to how you got. How what crypto trading is about, day trading. That's the basics. What you think we need to know. Yeah. So everybody, meet Oluwaseun Lawal. He's also a market analyst at Coins and Cash. He's really good at what he does. I know firsthand because I work with him. So yeah, you guys are going to be hearing from a very quality guy. So yeah, Slump is over to you.
Thank you very much, David. I don't know if you guys can hear me clearly, though. Please confirm if you can.
Loud and clear.
Okay, great. So as earlier said, my name is Oluwaseun Lawal. So I'm a technical analyst, and you know, one thing I learned in this field when I started back in 2020 is that you need to be involved. You need to be involved. The whole concept of technical analysis is something that most people don't really understand. There are lots of noise going on in this space that if you don't understand how to filter those noise, even on your charts, it might become very difficult for you to follow the trend, to actually make anything out of this space. And that is essentially one of the reasons we are organizing this particular series, so we can educate everybody, let you understand what technical analysis is about, how you can leverage on it, how you can capitalize on it, understand the market. And you know, the beautiful thing about technical analysis is that once you understand technical analysis, you can apply it to anything in finance and trading. It can be applied across boards, whether you're a forex trader, you are a stocks trader, you are a crypto trader. So, and this is one of the reasons you will see some people introduce themselves as technical analysts rather than forex trader or crypto trader. For someone like me, I started with forex. I traded a bit of forex, and then at some point I decided to come into crypto trading. So, and it was still the same concept in technical analysis that was, applied to crypto trading. So, except for the small differences, when it comes to apart from technical analysis, there's something we call fundamentals. So it is only fundamental analysis that differs. But for technical analysis, it stays the same across all boards, all trading boards. So it doesn't matter what you're trading, you need to understand technical analysis. So we are going to be having a series today and tomorrow. So I implore everyone here, do not waste your time, pay attention to everything we are going to be saying. And at the end of the day, I can assure you that to an extent, you're going to understand what technical analysis entails. So we're going to make sure that is what you get. That is what you get. And we are not taking the time. In just 1 hour time, we are done. So there's and one other important thing is that after this class, we are going to be sharing some materials. We're going to be sharing materials. If you're not a reader, forget it. You can't succeed in this field. You need to be able to read, update your knowledge, catch up with trends, and all those things, they actually come from books. So we are going to share those materials. Make sure you're reading them. Make sure you're understanding what is happening in them. And if you don't understand anything, we have our community where you can always, ask questions, and we will always be there to answer your questions. Thank you very much. Ija, over to you.
All right, splendid. Thank you so much, guys. Yeah, thank you so much, Oluwaseun Sunbeams. Really appreciate your you telling us about it. So yeah, you guys should not get scared about the reading part. I mean, it's money. You should be ready to do what you have to do for money. It's not a passion project right now. You're about making big bags or losing big bags, because I think one thing they both said that strikes me is the fact that you can make money and you can lose money. So yeah, to also expand on that knowledge, it would still be Oluwaseun, our son base. He'll be telling us more, giving us. We'll be diving into the fundamentals today, the most basic information you can get on technical analysis and day trading, the most fundamental information you can get. So yeah, some bits you can go up so that we get the people what they came for tonight.
Okay, thank you very much. So we are just going to get started on the class right away. So I'm going to just run us through what you have for tonight. Yeah, so the first thing we are going to be talking about, I'm not going to tell much on that, is introduction to blockchain and cryptocurrency. We are a cryptocurrency business here, so we want you to understand what we do, and if you're willing to come into this space, what you are getting yourself into. And then in the process of doing that, we're going to be talking about some of the terminologies in this space. Especially we're focusing basically on the ones that has to do with technical analysis, not the whole thing per se. So if you want to know the whole thing, we have our platforms where we share information materials. We have our 1 minute lessons, our crypto spotlight every week. So you can always make reference to that. So then finally, I will just be telling you what your expectation should be when you're dealing with technical analysis. So we then talk about technical analysis generally. So from there, Tunde will now come and take over from me and then start showing you some stuff on technical analysis itself. What we are talking about is going to put it into perspective. So not to waste our time, um, what is basically cryptocurrency and blockchain? A lot of people have been hearing blockchain, and cryptocurrency. So basically, cryptocurrency is basically a record, or let me say, blockchain is a record of transactions um, on a particular system that is built in blocks. So, like the name implies, block and chain, it is built in blocks and it is interconnected. That is what makes blockchain impenetrable. That is what makes it transparent, and anybody cannot come and alter or tamper with what you have on it. Everybody can see it, but nobody can tamper with it because it is verified by thousands of peers around the world. So
Sorry, we lost you. Are you still there? Can anyone else hear me? Or yes, one base?
No, we can't hear Tunde anymore.
Okay, please let us give him a minute. Let me. It's probably the network. Are you back?
yes, I am. I am. I'm very sorry for that. I just
No
noticed
problem.
that network. Yeah. So
Sure,
what was
sure.
the last thing you heard me say? What was the last thing you heard me say? So I can just pick up from there.
Something about materials we're going to share here today. Yeah.
Oh, so that means wow, I've gone far. Okay, so let me just start over again. So I was talking about blockchain. I started from blockchain and what blockchain entails generally. So I was saying that blockchain is basically what the name implies, block and chain, which means we have a kind of cryptographic network that is built together. They are interwoven. So what that basically means that is that they are transparent, but then you cannot alter them because they are verified by millions of pairs around the world. That is why we have when you hear people mining cryptocurrencies, there are machines, there are special machines that are dedicated to mining them. And what they do is that they create blocks. Each of those machines creates blocks that is verified across board to make sure that nobody can actually alter any information on the blockchain. And an offspring of the blockchain is cryptocurrency. So cryptocurrency is what all of us know now, even though we don't understand, most people don't understand what cryptocurrency entails. So cryptocurrency is an offspring of the blockchain, which is a kind of currency, a digital currency that can be spent on the blockchain. And we have a lot of them. We have Bitcoin, that is the most popular of them. We have Ethereum, we have BNB, we have Torchain, we have thousands of them like that. We have thousands of them like that. And then one interesting thing about blockchain is that for each of these cryptocurrencies, some of them actually have their own dedicated blockchains. So also, there are two types of cryptocurrencies. Some we call them three, but I like to classify them as two. The first one will be the coins. So when you hear coins, just understand that this particular cryptocurrency has its own blockchain. One of those cryptocurrencies that have their own blockchain include Bitcoin. So Bitcoin has its own dedicated blockchain. We have Ethereum. Ethereum has its own dedicated blockchain, so it is a coin. We have BNB. BNB has its own dedicated blockchain, which makes it a coin. And we have a lot like that. We have Crow, we have Metis, all those ones who have their own blockchain. But then we have the other two, the second one, which we call tokens. Tokens are usually built. They are usually built on another blockchain. So tokens are always built on another blockchain. So some people see token, they call some tokens shitcoin, which is the third one I was talking about, that I don't really like as a classification. I like to call them tokens too. So a very typical example of those ones are Shiba Inu, which all of us know, and Dogecoin. So they were built on the Binance blockchain, BNB blockchain. So which means that they are an offspring. They don't have their own blockchain per se. They are an offspring. Most people call them shitcoins because they basically don't have a use case compared to coins like Ethereum, which has scalability. You can build projects on Ethereum. You can build up. You can build even other tokens on Ethereum blockchain. When it comes to shitcoins, you can't do that. They are basically just there as meme tokens. They call them meme tokens just for the fun of it. So that's basically the broad categorization of cryptocurrencies. So let me now go to the terminologies. So they are basically, I classify them into 5 because we are dealing with the terminologies that are related to technical analysis, since this class is for technical analysis. So the first one will be bullish and bull. So I'm putting them together because most people don't know, they basically use them together. So there's no point of separating. So when you're talking about something going bullish, we are basically talking about an upward movement in the price of a particular asset, in this case, cryptocurrency. So for example, now in the past 2-3 days, BTC has successfully moved from 43K region to, I think it reached 49K yesterday. So that is a bullish momentum. That is a bull move. Do you get? So moved from 43 to an higher price, which is 49. So then the opposite of that will be the bear or bearish move. So which is actually going down. When BTC, let's say BTC is going from the 49 it was yesterday, now retraces back to 45. Let's say it goes back to 45. So that is a decrease. It is a negative movement. It's a backward movement. So we call that bear or bearish. So there is another term you'll be hearing a lot when we are talking about technical analysis, and that is retracement. So whenever anybody tells you that something is retracing, we are just basically telling you that an area that price has moved, it is coming back to test that area. One thing you should know about trading is that all these coins, they don't just go parabolic in one direction and keep going. No, it doesn't work that way. There are structures in the market which they have to respect. And when we approach one structure that I'll be talking about next, which is, let's say a coin is going upwards, going from $10 to $20, 20 to 30. At some point, people take profit. Somebody that bought at 10 and the coin is now at $30 might decide that, well, I've made enough from the market. Let me just take profit at this 30. So a lot of people do the same too. And when they sell, the market retraces back. It might come down to like 20. So it is also a kind of correctional move, depending on the direction. Retracement can be positive or negative. It can be negative when the market is going upwards and then people are taking profit. So it comes down a little bit. It can be negative that way, but it can be positive if the price is crashing and people are trying to buy the dip. So because more people are now demanding for that coin, it might go up a little bit, which is before continuing its downward trend. Some people will try to take advantage, bag some of the dip, while some other people will decide that, oh, I missed this entry, let me wait for retracement, and then they will sell it. It might now continue its journey downwards from there. So that is retracement for you. So now there is another thing that you need to take very cognizance of, and that will be your support and resistance. I'll be explaining both. I think this one will be explained better when we get to the point where we are using the charts. I won't dwell so much on it. I just want you to have an overview so that when my partner is talking about the charts, you can see what I have been talking about. So when we're talking about support, look at it as something that is falling from up and then something raises it to keep it from falling further down. And that is basically support. When a market, the price of an asset gets to a point and, retracement happens, like I said earlier, support is what is the area that people used to look at. Maybe market has tested that point over time. It is a support. And most times in technical analysis, it is a point where you buy or sell, depending on what your prediction or your bias of the market direction is. So it is usually at the bottom of the price. We will show you that when we get to the chart itself. So then we have the opposite of that, which is the resistance. It is the opposite of support. When something is going upward and something comes to block it from moving further up. So we call that a resistance. So because of our time, let me just move on till we get to the chart part. So then we have one of those things we'll be talking about, which is candlestick patterns. Candlesticks, when you see the chart and you see what, I don't know if some of us don't even know what candlesticks are, but you're going to see them in this class. So candlesticks are also one of the tools we use in analysis, in technical analysis. So, and they don't just form. Every single move, every single component of a candlestick has a meaning. There's a price movement embedded, a secret embedded in them. They have shadows or weights, they have bodies. So they form patterns collectively. So then we have chart patterns too. So chart patterns is basically a collection of different movements that are now forming certain patterns. You have those patterns. There are like, I think 10 of them, depending on who you ask. Depending on who you ask, we have the pennants, we have the flags. If we don't show you tonight, I think I would drop a material where you can see all those types of chart patterns. They are very key too because they show you the direction of the market. They show you, at times you may not even need to look far when you're trading. You just look at it and you see that pattern, the chart pattern, and then boom, you know where the market is going. So finally, what we have tonight here is trends. So the market actually has 3 trends. We have the uptrend, the downtrend, and then the parabolic movement, a non-trending market. When I say parabolic, I mean something that is not going up or down. It's just going sideways, zigzag, going like that. We call it parabolic. It's neither going up nor down. So when we are talking about uptrend, it's simple. Market is going up, uptrend, trending up, downtrend, it is going down. It's going down. So I want to quickly show us something now. I'll be sharing my screen. So it is basically some of the apps that we use in technical analysis. So I will be showing you Binance, which is the most popular exchange. They have some tools that can be used for technical analysis. I don't use them anyway because I feel it is rigid. I never use an exchange tools for my analysis. Then, I will show you anyways. So then we have Tab Trader. Most people use Tab Trader. If you see, like, I think 50 to 60% of traders use Tab Trader because of the ability to relate with it. It looks complex to some people, but once you get used to that, and it has some tools that you know is very important for you. But for me, I use TradingView, which is the third one I'll be showing you. I use TradingView because it looks so simple. You can easily understand it. It comes with a lot of tools. It comes with other functionalities that, like, price alert. Maybe you want to know what is actually, you want to be informed if market gets to certain price. TradingView gives you that opportunity. And it is one of the tools I have explored so much. So let me quickly share my screen and see if I can show you those ones. Okay, coming. I'm still with you. Okay. So can anybody see my screen? Please confirm if you can.
I can see your screen.
Yes, I
Okay,
can
thank
see
you. Thank you very much. So the let me start with Binance. Okay, so this is Binance. If you want to see where you can actually use your technical analysis tools here, you have to go to the part where you trade. So let's see the advanced trading tool. Let's see. So for most of us, someone like me, I don't use Binance much on PC. Yeah, I use it on my phone. So this is technical analysis. This is what it looks like. And every candle you are seeing here, every bar you are seeing here, they are called candlesticks, in case you're not used to them. So, and then as you can see here, for every candle here, most of them, they have, oh, my network. Oh. So I'm trying to zoom in to show you one or two things.
We can still hear you though.
Yeah, I know. The page is loading. Okay, so you can see right here where where my mouse is at, extensions of these candles, we call them shadows or wicks. So we don't want to dwell much on that. I'll be sending a material on that. So this is basically what it looks like. On your right here, on my right here, we have what we call the order books. This is the ones in red here are the sell orders, while the ones here are the buy orders. So what that basically tells you is that everything you say is the amount of BTC, because this is the BTC chart. It's the amount of BTC that people are selling at this time. And the green one here shows the amount that people are buying. The one we have here is actually the volume bar that shows you how much people are buying at every interval. And one thing about this chart is that every single bar here represents a time period. Every single bar here represents a time period. I don't know if you can see where I'm hovering at now. This is 1D. This is 1D. This means that every candle here depicts a day. So if I change it to 4 hours, you see that the chart changes pattern. So which means every candle here makes up 4 hours. One is 4 hours. Another one is 4 hours. So which means that 6 of this makes a day. You might want to go down to, let's say, 15 minutes if you are a scalper, but yeah, and you can see what we have here. The structure changes entirely because it is a different time frame. So this is the Binance interface. You can always place your order directly from here after doing your analysis. You may not have the luxury of that on tools like TradingView. So let me quickly go to TabTrader. So this is what TabTrader looks like when you log in. So you can see that all the coins with the highest market cap, they are here. BTC being the first one. I think it owns about 40 something to 50% of the entire money circulating in the crypto space, and then followed by Ethereum, followed by Doge, just the popular coins. And the popular coins are usually the ones with the biggest one. So if I want to see the chart on, say, Ethereum, I can click Ethereum here. It opens a new tab, and bam, you have your chart where you do your analysis, as you can see. So up here, you have the time frame where you can select, like I showed you in Binance. If you want to check daily, you want to see if it is a daily chart or something, you can do that here. You can decide not to use a candlestick. Maybe you want to change to lines. You can do that here. So let me just go back to 30 minutes, leave it at candles. Then there are different tools here. Most times you may not get to use a lot of these tools. Many people just constitute nuisance by using 1,000 tools. What you will see me use most times will be my trend lines, which I have here. See the trend line now. You can draw a line to determine the direction of the market. So this class will entail how to use trend lines, but I'm not doing that. I'm just showing you the interface. We have different tools. You have the snap tool. Here we have the measurement tool where you can measure the amount of pips or percentages you're taking from the market. We have a vertical line. You want to map out some areas. We have a lot of them. You can go there and play around with all these tools and see what they do. Just familiarize yourself with this interface. So you see that this one has order book too. So because you can actually place trades directly from here to, if you link it to any of your accounts, I think you should be able to link it to your Binance, KuCoin, and some others. I've never used it, but I think you should be able to do that. That's why we have order books. So yeah, then let's go to the last one for tonight before I round off. And that is TradingView. So TradingView will always tell you to join them. Let me log in my details. Let me just use my other one. So tradingview.com/chat, so that I can just log into my account and show you. If I don't log in, it's not difficult for me to show you stuffs. Okay, so this is TradingView. This is my beloved analysis app. As you can see, there are a lot of things going on here already. Don't mind me. So this is TradingView. I love the fact that this is so simple. It has so many tools. You can customize the background. You can, if you like a red background, a black background, you can change the color of every single candlestick here. You can say the bullish should go green, the bearish should go purple. Customization, we have tools here, see the trend lines and every other thing you can do. Everything that has to do with line is here. You have trend line, the arrow, the ray, extended line. You can play with them and see what they can do. The horizontal line here is what I used to draw this structure. The green lines you can see here. So I'm selecting it now. If I click here now, you see the line comes up and then I can customize it here, change the color, change the thickness, let's say 4 pixels. You can do that. So then here we have the Fibonacci retracement. I don't think we are not going to that for the sake of this class. That's a little bit advanced, where you measure markets without using structures. So then we have all these things. Many of them I've never tried before. We have the channels, but then you can always try them out. Then the next one, we have the rectangle tool. Rectangle tool is what I used to mark this zone here, this particular box here. So that's the rectangle tool. You use it to draw an area on your chart. So we have a lot of them. We have the highlighter if you just want to mark certain places for whatever you want it for. We have the brush. We have the ellipse tool. A lot of them like that. Then here, I don't think I've ever used anything here. They are more advanced tools. Then we have the long and short position. If you have seen people post things on their status, like I don't know, people used to do that thing. They post their position and how it has filled. That's the tool for it, as you can see here. So the red part is the amount you are willing to lose, which is your risk. This basically shows your risk to reward. The green part is the amount you're willing to see as profit. So when you understand technical analysis, you know how to position yourself for that. Then we have the price range, the date range, where you measure the price, and you can use the ruler tool. We have the zoom tool, the magnet mode, and every other thing. So that is basically okay. I don't want to really delve into this part. There are a lot of things going on here, your watch list, your alerts, your headlines. You have communities here. There are places where you can watch tools, you can get news, you can reach out to community. A lot is happening on this part. I know the beautiful thing about TradingView is that it is not just for crypto traders. If you like the trading stock, if I click BTC now, you can see, we have the stocks, we have the futures, we have forex, we have bonds. I mean, it is so wide. So it is whatever you want it to be. You can analyze Tesla stocks here for as much as I care. So that's basically it. So we are going to, for tonight, I would implore everybody that these 3 tools I've shown you today, you should go back and play with them. All of them can be accessed from your mobile phones. In case you don't have a personal computer, you can access them from your mobile phones. CapTrader has an app, TradingView has an app, Binance definitely has an app. So download them, sign up, look at the tools, get familiarized with them. If you need to read more on them, so that by the time we get into the depth of the class, you'll be able to catch up. So then on a final note, trading expectation and psychology. This one is going to take just 5 minutes. Whenever you're going out learning technical analysis, learning all these tools, never come with the intention of getting rich quick. Never. At the end of the day, you're going to really suffer. There is one of the guys I used to watch on YouTube, Renatio. The guy is a very profitable trader, but if you see the way he's being conservative about his trading, you will know that you have no business coming to there and seeing people you want to just be making 1 million in a day. It doesn't work like that. Most times you end up in debt and depressed, and you lose the confidence to actually continue. There are demo accounts you can use to train yourself over time, and when it is time for you to go live, don't be overly enthusiastic about it. Give yourself time, understand the process, master the whole thing. Let it become a part of the such that when you open a chart and you look at it, you can predict to an extent what is happening in the market without touching anything. Somebody just open a chart before you, and you can easily tell them that this is what is happening in the market and this is what may happen next. So you need to train yourself for that. And another thing is, like I was just to enforce what I've said. You will see people saying that they've made something percent, 200% today. People post that a lot. When I started trading, I was intimidated by that a lot until a lot of people were exposed to me. You see somebody posting 500% gain. It doesn't work like that. When you see the amount they are using to trade, I've seen people use as little as $3, $500. So they will just gamble. And then that their 500%, they will not even make $20 from it, because out of that $5 that they put in the market, they are risking maybe just another 20%. And then they will now show you that they are not, they've made 500%. Come and do this, come and do that. And you are growing steadily, you'll be intimidated that God when. Please don't be fooled. All those, a lot of people call themselves masters. Comrades, it's a lie. I'm saying this because when you start seeing things and there's a kind of confidence that comes with it. I'm telling you from experience now, there's a kind of confidence that comes with it that makes most people feel. That is why 80% of people will never go near trading again. I was hearing about somebody in this trading space yesterday. He has lost people's money, and people are still adoring him out there because he will still be posting results that are not consistent. I never trust people who post results. This is that. No, I don't, because I've seen that most of people make money from teaching you stuff, not from actually trading. They just give you a kind of mindset that they are the best in this market. So when you have that at the back of your mind, you will be able to give yourself time to grow. When somebody's saying I made 100,000%, you don't care. You take time to learn. You take time. You dwell in the growth process. So, and then the psychology of it is that never rush. Have a trading plan. Always have a trading plan. I think today we'll talk more on this when it starts its part. Have a trading plan and stick to it. You will see a lot of stupid movements in the market when you start trading. And then if you don't stick to what you know, trust me, 1 minute the market is going your way, you are happy. The next minute everything just goes. Then you will now remember that I knew this would happen, but I just decided not to follow my heart, my training. Always have it ready. I have it in a sheet now on my Google Keep. I open it on one side. So there are certain conditions that must be met before I can enter any trade. All those conditions must be fulfilled. If one is not fulfilled, that means I'm not entering that trade. This game is a game of patience. So you need to learn that. And another thing is that most people will not tell you is that you can actually become rich, very rich in this space. Can become very rich. Honestly, I've seen it happen to people a million times. So do you know the difference between those who actually make money from this space and those who don't? Is that they know when to leave the market. The market is not a full-time job unless you are an investment manager for a company or something. And even those guys, what they do is they just watch the market, see how it plays out. They don't trade all times. So when you know what you want, you become a conservative trader. It helps you to build wealth. So instead of you making 10% today, losing 20% tomorrow. You can make consistent to 2%. You can make consistent to 2%. And then that is how wealth is being built. So I believe I have motivated you enough to know that you should not give up. You probably lose money. I mean, probably lose money. I've not met a trader that didn't lose. So, but then once you understand that you don't over leverage, don't do past yourself, don't come with the intention to be rich overnight, you'll do fine. You'll be fine. So thank you very much. I'm going to stop here and give the floor to Tunde.
Hey guys, thank you, Sunbase. That was really, really insightful. Like I was enjoying it. I didn't want you to stop, but then we had to get into the game. So guys, I hope everyone can hear me. And now we are going into the real thing, the real deal about technical analysis, how you trade, why you need to use technical analysis for your trading. Can you guys hear me? Happy
Yeah,
yes.
sure.
Loud and clear.
Okay.
hear you.
So for today, I hope we'll be able to take everything. Start with technical analysis. I know you have explained some part of it, but we need to go in depth now. In depth. Start with technical analysis, what it's used for, how to use it, and some terms, and then how you can actually buy and sell. So I hope you guys are writing, because trust me, you think you know it, you think you are getting it until it's your time to analyze the market and you are just lost, you don't know what. So please write whatever you hear, just write it, because it will help you tomorrow, 2 days after. Trust me. So first, technical analysis. What's technical analysis? Technical analysis is the method used by analysts to identify trends and make predictions. It's very simple. What we do is we just study past market data, then we use it to determine what would happen in the future. Okay, just the same way every individual can tell that during festive period, our clothes, our foods, where everything would be cost like more than normal. Everybody can tell me that okay, by December, the shoe that you're getting for 40K should now be around 70K. Yes, you're an analyst, because you know that by December it should be costing more than it used to cost. And because you've seen the past trend, you know that festive period, most people want to get shoes, they want to get clothes. So we have high demand and then there's little supply. So the prices skyrocket. Very simple. Everyone can do that. It's just the same thing we do in the market. Yeah. We analyze the market, use what happened in the past, then just determine what would happen. Yeah. So what is technical analysis? Traders use technical analysis to make their own predictions of where the market might be headed to. Market might be going up. Traders use technical analysis to know when to actually get into the market. Market might be going down. Traders use technical analysis to know when to get out of the market. Yes. So they use technical analysis to know when to buy. Another term for buy is long. We treat terminologies so you know terminologies that technical analysts use, and sometimes they don't want you to understand what they're saying, so they just tell you they are doing this, they are doing that, and you're like, what does that mean? Just simple things. So now, how do we use technical analysis? For us to understand how to use technical analysis, we need to actually treat some terminologies. We have a lot of terminologies, but the ones you need, the basic ones you need, and can take you far, can improve your trading game. One, long or short. I hope everyone is right. Long or short. Second one is trend. Third one is support and resistance. Next one is trend line. Next one is consolidation. Next one is pullback or retest or retracement, as some may say. Trust me, he killed everything from the beginning already. This is just practical class. I'm going live soon. Share screen and you see everything he has said. The first one is long or short. Long or short, just another name for buy or sell. If I say I'm longing the market, I'm looking to long the market. I'm not trying to tell you I'm looking to buy. looking to buy the market. And if I say I'm shorting so coin, it means I'm looking to sell the coin soon. So that's it. Long or short, buy or sell. And you can also say I am bullish on Bitcoin. Bullish on Bitcoin means I'm expecting Bitcoin to rise. I am bearish on Bitcoin means I am expecting Bitcoin to fall soon. So all these terms are just simple things you need to know. Just buy and sell, long and short, and bull and bear. So now trend. This is where the real deal is. Trend is your friend. Trend happens everywhere. In markets, we have three kinds of trend. We have the uptrend, we have the downtrend, and then we have the consolidation. Now you need to know that the market does not just go up. It doesn't just go up straight. Like let's say you're going to Ikeja now and then you see a straight bus, you're going straight. No, the market doesn't move that way. Markets move, it moves like zigzag. That's how the market moves. It moves in a zigzag manner. That's why we have retest, we have pullback. So all this happens in the market. So now we also have support and resistance. Some people are explaining these things. We have trend line, we have consolidation. So let me share my screen so we can start with trend. And so we can see how the trend is, how to identify whatever trend we are. Remember, I said we have three kinds of trend. We have the uptrend, the downtrend, and then the ranging or consolidating trend. Share my screen. Okay. All right, so this is my trading view, and this is my analysis. Let's just go to what we are here to do. Now we have the uptrend, we have the downtrend, and then consolidating trend. Now this is what an uptrend looks like. You can see me using the tools what Sunbase explained. It's very simple, trust me, very simple to use. So I'm looking for a particular tool that would allow me to draw a trend. Okay. So now first is uptrend. This is what an uptrend is. The market moves like this. Can everyone see my screen?
Yes, we can.
Yes.
All right. All right, so this is what we call an uptrend. This is what an uptrend looks like. It would always happen. Now, in an uptrend, for you to identify that the market is in an uptrend, you need to actually determine or make sure that the market makes something we call higher high and higher low. Higher high and higher low. Now, first, this place where the cursor is, this is the low. This is the low. Then here, this is the high. Are you guys writing? This is the high. This next one is called the higher low. Why is it called the higher low? Because it is higher than the previous low. So we call it the higher low. And then the next high will be called higher high. Why? Because it is higher than the previous high. Same thing goes with this. This is higher low, higher high, higher low, higher high, higher low, higher high. Like that. That's what makes an uptrend. That's how you know you're in an uptrend. And what do you look for in an uptrend? In every uptrend that you are, as a beginner, what you should be looking for, or let's say as a conservative trader, what you should be looking for in an uptrend is buy. Always look for where to buy. And where should you buy here? You should buy at every higher low. Buy at every higher low. That's where you should pick your buys from. Now, me telling you to buy doesn't mean you just enter a buy. There are still a lot of things you need to look out for before you can enter a buy in an uptrend, which is your candlestick confirmation. That one, it tells you you can actually enter a buy. But the thing you need to know first is that the market moves in either uptrend, downtrend, or the market is consolidating. When the market is consolidating, as a conservative trader, all you have to do is just wait. What you should be doing in the market, look for uptrend and downtrend. When you're in an uptrend, enter your buys. When you are in a downtrend, enter your sales. Now, this is an uptrend, a practical example of an uptrend. Now, let's see what a downtrend looks like. This is what a downtrend looks like. And when the market is in a downtrend, it keeps going down, going down, going down. So as a conservative trader, what do? You should look for sales. Sales are rare. Now, how do you determine that the market is in a downtrend? Just the same thing we did for the uptrend. You need to see lower low and lower highs. The first one here, where the cursor is now, this first one is called the high. Here, it's called the low. And this one is called the lower high. Why is it called the lower high? Because it's lower than the previous high. And this one is called the lower low because it is lower than the first low. And this one is called lower high, lower low, lower high, lower low, lower high, lower low. So if you've seen that, then you know you're in a downtrend. What you should be looking for is your sales. And where should you enter sales from? You enter sales at the lower high. You enter sales at lower high. You can enter your sale here. Enter your sales here. You can also enter it here, here, and here. So that's for trend. That's for uptrend and downtrend. Now, what's the consolidating trend or ranging trend? Just the way the name implies, the market is ranging, just dancing around a particular zone. When the market is consolidating, you see something like this. The market is hitting the same resistance, same support, same resistance, same support, keeps doing that. So as a conservative trader, what you need to do in this kind of market is just wait for it to finish trending, then it can either start an uptrend or a downtrend. So now that's for trend. The next one is support and resistance. Now, what's a support? Support has been explained by some base, so I really do not need to go deep. Let's just say support is like a floor. The only thing that is not making you sink is because of the floor or the ground. Then resistance is like a ceiling. Like if you try, let's say you are bouncing your football inside your house now. The only thing stopping your ball from going outside is your ceiling. Because if not for the ceiling, the ball can bounce and go out. But because of your ceiling, it bounces back. Because of the floor, it bounces back up. Right? So that's for support and resistance. Now we also have something we call the trend line. What's the trend line used for? The trend line is a line used when the market is trending either up or down. Remember, we said we have the uptrend and we also have the downtrend. We use the trend line when we are in the uptrend or a downtrend. Now let's go into the market proper. Enough of drawings. Let's go into the market and identify a ranging market, a trending market, uptrend or a downtrend. Now, trust me, whatever time frame you're working on, the same technical analysis you learned on daily or 4 hour or 1 hour is the same technical analysis you use on whatever time frame. So for now, we do not really need to talk much about time frame and when to use them. Just know that if you want to analyze your market, whatever time frame you are on, the technical analysis that you're currently learning will work for you. Can you guys hear me?
Yes, I can hear you.
All right.
Yeah,
So
sure. Go ahead.
This is Bitcoin chart, previous chart. You can see right here, market was in an uptrend. We have our first low here. This is our low, right? And we have our high here. Then we have higher low. And we have higher high, right? So this is an uptrend. Market was trending up, was going up, was going up. This is an uptrend. As a beginner, the first thing you need to be able to do is be able to identify the trend. If you can identify the trend, then you know what you're looking for. You know what you want to do. You know if it's buying, you know you want to buy. And if you want to sell, you know the kind of trend you should be looking for, which is downtrend. Now, this is another kind of trend right here. This is the downtrend. This is the downtrend. Okay, let me open a new chart. This one is looking. All right, so let's open this.
Are you still there?
All right.
You are okay.
So now let's identify this. Where is the ranging market here? This is a ranging market. Market is ranging here. It's dancing around this zone. Now this is a ranging market. Market keeps hitting the same support, keeps hitting the same resistance. You don't know if it's going up or going down. That's why we said in a ranging market, what you can do is just chill till the market moves either up or down, then you can make your decision. You can see that after this range, what the market do? Market started going down. It started falling, right? So now I'm using my phone so that you guys will not tell me you don't have a laptop, that's why you cannot trade, or that's why you cannot analyze the market. These days or recently, I've been using my phone and I still trade the same way I trade with my laptop. Trading has been going smoothly, no difference. Just big screen and small screen, no difference. You don't need to carry your laptop up and down. You can use your phone for everything. Now that's for consolidation. For uptrend, this is an uptrend. The market is in an uptrend here. How do I know? Market was making higher low. This is a low. This is an higher low, higher low, higher low, higher low, higher low, higher low. The market got to a particular resistance, then started rejecting. Remember, we said support is our floor and resistance is our ceiling. Now, when you're in the market, how do you identify your support? Look for wherever the market has been hitting more than once and is finding it hard to break. Now, this is example of a support. Very good example of a support. This is a support. This is a very good support. Market has been trying to break it, but it's not breaking it. And what happened? Market started going up. Now I just picked my trend line and I'm trying to draw a trend. This is an uptrend. You guys will agree with me. This is an uptrend. Market just moved higher. We have our first low. We have our first low here, our second low, third low, fourth, fifth, like that. The market keeps going up. And what do we say you do in an uptrend? You look for buys. You could have entered a buy here, another one here, another one here, here. Market keeps moving up. Now let's look for a downtrend here. Let's look for a downtrend. We've identified the support. We've used the trend line support. Any support you are drawing from the bottom, or any support you are drawing in an uptrend, it's called the trend line support. And this is a downtrend here. This is a downtrend. I'm sure everyone can see it clearly. Market was trending down. This is it. Market was trending down. This is market moving down, going down. So you can tell me, or you can see for yourself that market made an high. We have a lower high. This is the first high. Can you guys hear me?
Yes, we can hear you.
This is the first high, lower
Yes,
high,
we can hear you.
lower high, lower high, lower high, lower high. And what should you do in a downtrend? You should look for sales. So you could have entered a sell here, sell here, sell here, and make your money, cash out. You don't really need to hold for too long. This is why technical analysts always win, because while some people are waiting for Bitcoin to hit $1 million technical analysis are milking their profits. Like when Bitcoin is moving from 45K to 50K, they make profits, they get out again and wait for it to retrace. What is a retracement? A retracement is when the market comes back or pulls back. Now you can see the market is in a downtrend. Okay, let's explain retracement with an uptrend. Whenever the market is in a trend, it doesn't just go up, it doesn't just fly up. There's always retracement in every trend. Okay, now let's take this for example. Let's just take this trend, this small one. Let's just take this. Now look at it. Market was going up. From here, market was going up, right? It came up to this place. Then what did it do? It dropped again. It came down. This drop is called a retracement. When you are in an uptrend, the drop in an uptrend is called a retracement. This drop is called a retracement. Market moves again. It moves up. This drop that happened here within this range is called a retracement. It moves up again. This drop is called a retracement. Trust me, technical analysis gives you opportunity to always see buy and sells. You don't need to rush it, like it will come all the time. Let's say I miss the first buy here. If I miss this one, trust me, I can't miss this one. Because two things have happened there, and we're talking about that soon. Another way to use your support and resistance is whenever the support gets broken, it becomes a resistance. Now let's use a story building for an example. If you are on the ground floor, if you move to the first floor, it means the first floor is now your floor, right? It means nothing can push you down except you want to move to the ground floor. So if you are on the ground floor, you are trying to bounce off the ceiling on the first floor or the ceiling on the ground floor, will push you back, so you fall back on the floor. Now, if you finally find your way to the first floor, the first floor also has a floor. Now, that new floor will now become your support. Before, that floor was acting as a resistance, which was why you could not move to the first floor. Now, you found a staircase and then moved the right way to the first floor. Now, the floor you are now standing on is now your support. Now, this is what I'm trying to say. This is a support. This right here is a support. Mark.
Are you still there, Tunde?
Market was trying to break. Hello?
Are you still there? Looks like a call in doubting.
Hello, can you guys hear me? Can you guys hear me?
Yeah.
Sorry, the call
Yes, we
came.
can hear you.
This is a resistance. This is a resistance. This one right here. This one right here was a resistance because market was finding it hard to break through this particular zone. And what happened? It finally broke it. Now, as soon as the market breaks that resistance zone, we expect it as a trader, as a technical analyst, we expect that our previous technical analysis, our previous resistance that has now been broken should become a new support. Right? Can you guys hear me? Hello? Hello?
Can I hear you?
Hello, can hear
All
you,
right.
can hear you.
So market broke this resistance, and when it went up, market retraced back. It retraced back and respected our previous resistance, which has now turned support. Do you understand? You need to know that in the market, you're using your technical analysis to analyze the market. There's every tendency that your resistance can become your support and your support can become your resistance. So in an uptrend, always expect that your previous resistance would become your new support. So now, as soon as market breaks my previous resistance, and then I wait for market to retest it, and as soon as market retests it and respects it as a support, what do? I enter my buys. And as soon as I enter the buys, I look to take profit around the previous resistance. Where is the latest resistance now? This is the latest resistance. The newest resistance, this is it here. This is the newest resistance because this is where the market is trying to break, right? So as soon as market respects my previous resistance and is now acting as a support, I would enter a buy and then take profit around this zone. Do you understand? Do you guys understand? Please, I need someone to say yes. So we can
Yeah, it's really clear.
All right.
It's really clear.
I didn't get that.
Please, sir, come again. Please, sir, come again. Thank you.
Okay. So I said we have the uptrend, we have the downtrend.
Please come again.
I said we have the uptrend and we also have the downtrend. In an uptrend, the market would always make what we call higher high and higher lows. And in a downtrend, the market would always make what we call lower highs and lower lows. I said in an uptrend, you need to look for buys. And in a downtrend, you need to look for sells. This is a practical example of an uptrend. This right here is an uptrend. Market was moving up. And as a technical analyst, what you should be looking for is where to buy. Where can you buy? You buy at previous resistance that now becomes support, or you buy on your trend line. Where can you buy on the trend line? This is what I explained here. This is your trend line right here. This is your trend line. Where can you buy here? You can buy here. You can buy here. You can also buy here. And if this market has touched this trend line, you can also enter a buy. Now you can see that this market also touched trend line, but what happened? Market sold. Yeah, that is what happens when the trend of the market wants to change. There would always be a break of a support or a resistance. There would always be a break of a trend line. It can be a break of trend line support, and it can also be a break of trend line resistance. So that's for using your trend line to know when to buy when you're in an uptrend. And if you're using your support and resistance, you should be looking to buy when the market breaks your previous resistance and then respect it as a support. As soon as the market respects it as a support, you enter a buy and take profit at your newest resistance, right? So we're already treating when to buy and when to sell. As a trader, when to buy, you always look for buys in the uptrend and you always look for sells in the downtrend. We talked about pullback, which is also known as retest. If I tell you that the market is making a pullback, you should know that I'm trying to tell you that the market is retesting. So if the market was in an uptrend and I tell you the market is just retracing, you should know that the market is still in an uptrend. The trend has not changed. It's only retracing. There would always be retracement. You don't just expect market to fly from 0 to 1 million. It doesn't work that way. It's not providing opportunity for technical analysis. Technical analysts get more opportunity than people who just buy and hold points for long. Yes, they also make profit, but not as much as technical analysts that know when to get in and when to get out. So with all this, I know you should be able to know where to buy and where to sell. So you don't just buy when everybody is shouting, wow, Bitcoin is rising. Okay, now let's check the current chart. This is the current chart of Bitcoin. This is what it looks like. Now, as a technical analyst, what do you think we should be waiting for? You would all agree with me that this was a support, right? This right here, this
Right.
line I drew here was a support, right? And when the market broke it, what happened? We had a retest around here. When the market retested it, it sold right down. This is to tell you that the market is in a downtrend. So this would have been the best place to sell. Now I used my trend line and I entered. I didn't get in on this buy. I didn't enter this buy. I got in on this buy. I took profit around here. I got in on another buy and I took profit around here. Now, what's happening? Market has broken a previous resistance. This used to be a support, now turned to a resistance. Now market has broken it. What are we waiting for as a technical analyst? We are waiting for the market to do what? Retrace. Market is flying, people are shouting, Bitcoin is going up, it's going up. We do not care. What we want is we want the market to come right here, test this zone, then now it can now go up to 50K, then we'll be fine. Do you guys understand?
It's clear to me.
All right, so that will be all on technical analysis.
Yes,
today.
yes.
I'm sure you guys got the real point, which is where to buy and where to sell. People shout buy the dip, buy the dip. How do you know where the real dip is? You don't just buy at any point. Where is the dip in this market? This is the dip right here. You could have bought the dip here, and you could have also bought the dip here. So when people are saying buy the dip, as a technical analyst, go into the market, analyze the market, look for your support, look for your resistance, look for where the market just broke. Know your trend. If it's in a downtrend, then you know you're not looking to buy dip. If it's in an uptrend, yes, you're looking to buy dip. How do you buy the dip? Use your support and resistance. Also use your trend line. So that will be all for today. Tomorrow, we'll give you more insight on how technical analysis works. This is just the beginning, and I'm sure it's getting interesting already. You now see how we know where to buy and where to sell. We don't just enter the market. We don't just buy because everyone is shouting market is going up. Market is currently on 47K. Technical analysts are just watching, waiting for a retest to happen. If I tell a beginner that I'm waiting for Bitcoin to touch 45K or 46K, they'll be like, God forbid, they want it to keep going up. Trust me, that person does not have money in the market. If you have money in the market, you wait for a retest, put in more money so the market can go up, then you get more gains. All right, so that will be all for tonight. Thank you, guys.
Thanks a lot, Tunde, for this session. I mean, it's quite a superpower to know where to buy and sell an asset. And also this call, I've come to understand that. So guys, we've taken a lot of your time, so we'll have questions tomorrow. So please, tomorrow, let's come back tomorrow for the next session. We'll have more content for you, and I'm very sure by the time you walk out of here, you'd have quite a bit to take the work by yourself. So yeah, have a good night. If you have any questions, please feel free to ask them in the community. We'll compile these questions, or you come early tomorrow. We'll give you the chance to to ask your questions, and we'll have the speakers, both Oluwaseun and Tunde, answer the questions that you might have. Thank you guys once more. Have a good night. See you tomorrow.
Thank you too. Good night.
So